Welcome back everybody to Altcoin Daily. Hit the like button. In today's video, I want to talk about why Bitcoin is tanking. Just to answer the question right off the bat, Bitcoin is down on the news that inflation for August came in higher than expected, 8.3 instead of 8.1. In today's video, I'm going to explain to you what you need to know about CPI numbers, inflation, the Fed. To understand this better, let's go over to Yahoo Finance and I'll pull a clip of one of their experts talking about exactly what is going on with these shocking CPI numbers. Goods and services are up because inflation is up. Watch this.
Yeah, it was a shocking number. Really, the core reading is what surprised us. It was up 0.6%, so it was double the increase of what we expected on the month. Headline was boosted by the core, but as expected, energy prices were down sharply, and food prices were up quite a bit, and that's just a continuing trend. But as the core number, core services and core goods. Now, core services are being lifted by higher rental costs. That's not a big surprise, but you also saw medical costs, transportation costs in the service sector high, and core goods, maybe that was the biggest surprise, kind of broad-based, and particularly with new vehicles continuing to rise.
So Bitcoin is down on the news of inflation for August. It came in higher than expected, 8.3 instead of 8.1. Yet, if you subscribe to this channel, or if you understand Bitcoin, like most of us do, you understand that Bitcoin should be up today. Its properties dictate that it should be inversely correlated to inflation. The fact that it's down shows just how early we are. And while I agree with the sentiment, while I agree it should be inversely correlated as more time goes on, it's important to be realistic and understand that Bitcoin is considered a risk asset by many, and it is correlated to the market. And with the CPI numbers, in fact, we saw the S&P 500, gold, Bitcoin, and the euro fall after the CPI print. So what is the big takeaway? Well, of course, inflation is a problem, is one of the big takeaways, and the market is still reacting defensively. Listen to this.
I think the big takeaway is, the inflation is still a problem. This kind of resets the market outlook. I think heading into this report, the market was up about 6%, hoping to see slower inflation. And if you remember, Esther George recently said that she was looking for at least 3 months of improvement in CPI. Well, we don't have that. We don't even have the first month. So this, again, puts the market back on the defensive, and it reinforces a key theme that we've been discussing really over the last several months, is that there's scar tissue left because of the inflation side. That means the Fed is going to stay higher for longer, and I think that's going to continue to cause challenges for this market. So we remain, a little bit more defensive and up in quality.
So U.S. Consumer Price Index numbers for August year over year coming in above expectations at 8.3 instead of the expected 8.1, but lower than in July with 8.5. Month over month, the core CPI coming in hot at 0.6%, twice as high as the expected 0.3%. We must answer the question, is inflation worse than we thought?
Is inflation much more persistent and stickier than we thought? And it may be. And that means that interest rates have to go higher for longer than expected. That really changes the calculus, right, of what the bond market's priced in, and now that the impact is spillover on the equity market. What to watch going forward? I think retail sales is the next big release on Thursday. And then beyond that, it's really how does the consumer and labor market withstand, continued tightening of financial conditions led by the Federal Reserve. Our view is that we're actually going to be heading into a mild recession in the first half of next year. And part of that is really going to be the fact that earnings growth is slowing quite a bit and even declining.
So, because the CPI numbers are higher than expected, because this is not what the Fed wants to see, let's go over to the experts, Yahoo Finance, one final clip. What exactly does this mean for Bitcoin? What does this mean for the market? And also, so I guess the Fed is going to continue their tightening of their monetary policy. Should we expect a 75 basis point hike increase? Should we expect a 100 basis point increase in the next meeting, which is next week? One final clip, watch this, then we'll get into some big Ethereum and crypto news.
What this means is the Fed is going to continue to have to tighten. And we also have the most aggressive global central bank tightening we've seen in the last 30 years. So we think that is going to slow things, pretty markedly by the end of the year. And we think odds of a recession next year are, at least 50%. As you think about the overall market, I think this is going to continue to wear in the market. The big challenge right now is as those rates are moving higher, even in the midst of a slowing economy, it's going to put some downward pressure on valuations. And you're seeing that more acutely in the growth areas of the market. Look at technology today, communication services, discretionary, all down 4%. That's the biggest part of the market. Those three sectors represent around 50%. So our message is to still remain somewhat more defensive areas like staples, healthcare, utilities. Energy is the one cyclical area.
Kathy, let's talk about the size of the hike that we could see next week. Nomura forecasting a 100 basis point hike. What do you think is most likely?
You can't rule out 100 basis points. I don't think that's most likely, but these were quite miserable inflation numbers, frankly. And the Federal Reserve is looking at this and saying we got to slow down the labor market. We have to slow down demand and reduce the pricing power that companies still seemingly have. So you can't rule it out. Our view right now is probably 75 basis points next week, followed by another 75 is a possibility in November.
Look, my friends, the biggest takeaway for me is that we might see one final shakeout getting into Q4, end of this year. I suspect that would be the last big shakeout for the cryptocurrency market, unless a black swan happens. And that doesn't mean that we'll necessarily go lower than the 17.5 or whatever ETH is, but it's possible. Either way, have some cash ready or hodl, or just understand that it's not just going to keep going down forever. And I think we're closer to the bottom than what we all realize, especially with information like what I'm about to share with you. Bank of America says the Ethereum blockchain's upgrade, the merge to proof of stake, may lead to greater institutional adoption. The future is crypto. Everybody can see it, including one of the biggest banks in America, the Bank of America. The notable reduction in energy consumption after the merge, so this was in a report that Bank of America wrote, the notable reduction in energy consumption after the merge may allow some institutional investors to purchase Ether for the first time. Those who were barred from buying tokens that run on blockchains using proof of work consensus mechanism for whatever reason can now purchase ETH. Maybe they're more comfortable, the institutions itself, purchasing ETH. Quote, the ability to stake ETH and generate a higher quality yield, lower credit, and liquidity risk as a validator or through a staking service rather than on block box lending/borrowing applications may also drive institutional adoption. These were the analysts in the Bank of America report. Bank of America says that a higher quality yield also has ramifications for the Web3 ecosystem of decentralized applications, dApps. A dApp is an application that utilizes blockchain technology to keep user data out of the hands of the organizations behind it. So to think about this, an insurance protocol such as Nexus Mutual needs to generate a return on its reserves to allow it to become a feasible alternative to traditional insurance companies, Bank of America said. Insurance companies normally invest their reserves in corporate and government debt, but instruments with similar risk and reward characteristics are difficult to find in the digital asset ecosystem. Staking on Ethereum may be the closest alternative. So that's what we're talking about here. The future is bright. In other news, Shiba Inu, not just a meme token, but really a meme token that's shining through much of the rest. For whatever reason, this is bullish for speculation and altcoins in general. Shiba Inu adds over 40,000 new holders in 3 months as the number of total addresses break past 1.2 million. This is that 3-month chart. Bullish. Current block times for Bitcoin suggest that Bitcoin's halving is coming sooner rather than expected, because still today in 2022, so many miners are turning on their machines to try and get some of the Bitcoins being mined. The hash rate just keeps going up. Bitcoin's hash rate has been running hot despite the lower prices and recent difficulty increases. In fact, blocks are being discovered faster than the 10-minute block intervals average because of this factor. The network's reward halving may come sooner than expected. While some have encounters that simply leverage the 10-minute average, note the halving is expected to be in May or April of 2024, halving counters leveraging precise block interval times show the halving event could happen as early as March 1st, 2024, maybe even before. Another long-term bullish indicator. Bitcoin is looking great. Ethereum is looking great. This is bullish for altcoins. And Bitcoin hash rate hitting a new all-time high the week of Ethereum's transition to proof of stake, truly poetic. Bitcoin, the best proof of work asset out there. Ethereum, soon to be one of the best proof of stake assets out there. And as the Bank of America report suggests, there's so much to look forward to. Ethereum has plans to go modular through a roll-up centric roadmap, outsourcing execution to L2s, keeping consensus and data availability on the main chain, and scaling further by sharding data. Also important to note, a host of other popular chains have similar roadmaps. Cardano. Here's an updated top crypto projects by number of active GitHub contributors over the last month. Cardano leads the way, then Ethereum, then Polkadot. We see Kusama, Filecoin, ICP, Cosmos, Decentraland, Solana. And speaking of Solana, Solana running hot as crypto hotspot project Helium eyes merge into Solana. With the Helium community eyeing a merge of its operations to Solana, Sol has jumped around 7% over the past 24 hours. Another reason to be bullish, DAO governance activity is exploding. In the past year, we've seen an 8.8x in number of DAOs, 8.5x in number of proposals, and 8.3x in number of votes. So, if you are still in crypto when we are here, give yourself a pat on the back. It's like being in crypto when we were here. It's like being in crypto when we were here. And I believe the future is bright. In today's video, I try to show you that. On this channel all the time, I try to show you that. So subscribe to become a smarter cryptocurrency investor and enthusiast with our daily informative videos. I'll see you tomorrow.